It's time for another market update. SPY has been moving along very sideways, very choppy, very uncomfortable. I think I said that a couple days ago, but I am still expecting a bounce overall at the minute degree. I've revised my count quite a bit. I want to talk about those changes really quickly, and I mean really quickly. I had to figure out where Minuet Wave 3 ended, where Wave 4 came into play, and where Wave 5 was before I could continue to figure out where we're at in this annoying sideways grind. And in order to do that, I ended up figuring out that we were probably in, this is probably a rare type of flat through here, A, B, and C. It's a running flat, very rare. C not coming above point A there, but B extending beyond the start of wave A. And then wave 5 was weird because it's just like this flat and then a vertical dive. But that matches the nature of wave 1, which is kind of like this weird flat, price falls apart. And so I called the end of wave 5 that extreme low. And from there, I'm looking for another correction. This looks like a nice and easy standard flat. So at the minute degree, I have A peaking in February 27th, B actually moving into the low of today, and then I'm looking for a rally for C. And if we get an expanded flat or some sort of weird 335 through here, which I don't think we will, but we could see 404. But I am expecting a bounce to at least 400 before we start the next motive wave down. And that is going to depend a lot on what happens in the dollar, I think. Yes, the dollar. The dollar has an inverted or a negative relationship, inverted, whatever you want to say. It seems like we go backwards with SPY. It's just I can't unsee it. Go watch the dollar bounce from hell video posted a couple weeks ago. It's really good. It's aged very well. What we're seeing in the dollar is a retracement from this push out and up from a lean diagonal triangle. We're looking for wave B, and so far I've charted A, B, and C at the sub-minuet level. I think we're going to push lower, and I'm going to end up labeling these 1, 2, and 1 of 3, 2 of 3. Looking for 3 of 3 at 103.757. 4 would come up probably to that 104 level in a sideways correction, because if this is wave 2, then we're going to have the opposite of this form, this being a zigzag. So wave 4 at the sub-minuet degree B flat, and then 5 dumping down, bouncing down. It's going to be choppy. I think the dollar is going to drop for a while and retrace this massive surge upwards. Meanwhile, equities will rise, and that's only if that occurs there. Something I want to talk about too really quickly is TNX. This is the 10-year treasury yield, and this goes up as bonds are sold. Premiums for bonds go down as the market's flooded with selling, and the rates therefore go up because the value of a bond is known. Once it matures, it's just what it is. And so when premiums go up, it takes away from the overall value. You get it, maybe not. I'm not going to explain a whole lot, but we do have a double bottom here that has confirmed. You can see the price is pushing above that intermediate peak at 38.77, and so this could continue to rise, which actually would support dollar strength. So the only way I can see this happening is if maybe we started to form a handle here off of this double bottom and we get a corrective cycle here, and that would give us a chance to diverge on a couple of different things. So it's very difficult, very hard to say what's going to happen next. Let's go to TBT. This is a short inverse ETF of treasury bonds. So as premiums drop, the inverse short goes up. You can see breaking through this downtrend going up higher. This looks like it's going to go higher too, right? So yeah, this trend is dangerous. It's very dangerous, and it could be very bad for equities. And this is kind of where I'm finding myself is, yes, I think SPY is going to bounce, and the meme stocks could explode in that rally. But we have some larger things with the dollar and bonds that are related to geopolitical events that could wildly change everything at the drop of a hat. So it's like, watch out. Anything could really happen right now, and it's just like really hard to forecast anything with any certainty with that kind of a dark cloud looming over your head. Nonetheless, I have Tesla pulled up on the hourly time frame now, and I saw this as a retracement, A, B, and C, looking for a little pull up. We're starting to get that, looking for 218.55 in a corrective bounce heading higher for Tesla. Of course, that bodes well for SPY. Apple, I kind of see running now in a flat, but we have a new low. So I'm going to have to look at this again. It's possible that we're just going to get an expanding flat. It's really hard to forecast these sorts of things because what ends up happening is you just have to guess, right? And if we don't get a full, we could get a running flat here actually too. And then head lower. yeah, it's like it's just too early to tell. We're gonna have to see some bullish movement here or some real bearish movement. This is starting to look like a tilted flag formation, and that would imply that this downtrend's only halfway over, which is nasty. You see that? There's 4 touch points through here after a flagpole. So if this is a half staff tilted flag and this thing pushes lower, the price target is gonna be very low, and we could see I'm serious. The markets could crash right now, and if they don't, then the rally is gonna be hyper irrational, and the riskiest assets are gonna perform very well right before reality check hits, and everything just plummets. And what causes that, I don't know. Going into NVIDIA next, still following this high and tight flag, not really getting anything. I think what we're seeing here is that right-angled and broadening formation. Seeing the price down here at touch point 3 along that yellow line makes me think, hey, if the price starts to pull up, then, you know, that's a buy signal from Bulkowski. But if it breaks down, it's like full bearish reversal. This is where we're at in the markets. Line in the sand today, tomorrow. Next week is probably going to be when we get the answer. Are we going up or are we just going to crash? I've been following a market crash since the last high. You can go back and watch those videos. I called it stock market crash day 1. And since then, SPY hasn't been able to set a new high from there, and that's why I'm calling it the crash. And that's really my bias. And this push up that I've been talking about, it's just a wave 2. And that precedes wave 3, which is this strong extended wave, at least theoretically. I think the market's looking for a bottom, and these rallies are going to be temporary. And I can see where they would form and fail to set new highs. So it's just sideways chop. It's confusing. I saw GameStop moving through a triangle, and you know, it just keeps dropping now. So we had waves 1, 2, 3. I thought we might have seen wave 4 and 5. It's just continuing to trend downward though, so we've probably got more than one extension in here. It's not uncommon too to see actually that trend, that channel breaks right there. This is probably 4 and 5. Let me see if I can quickly edit this. So these two lines are supposed to describe wave 5 in both time and price of wave 1, which was back here, 1, 2, 3, 4, 5. Because waves 1 and 5 tend to match if wave 3 is extended, and that's what this channel expresses, is that third wave extension. And if that is the case, and wave 4 breaks that channel, which it would, then all I need to do is relabel this 1, 2, 3, 4, 5. There's the end of that, and there's the bounce. This is looking more and more well formed the more I look at it. 1, 2, 3, touch point 4, and it looks that might be a little overextended. Perfect. Draw a line there. Yes. Bounce to 5. Bounce to 5, overthrow 5. See, rally through here with the markets, and then rejection. That is the kind of thing I forecast, and when it happens, it happens. You just gotta know where to place the triangles. I think the biggest one that I did was actually an SPY, and I'm calling, and I forget which chart it's on. I should look this stuff up before I show it. But there's kind of like this triangle that formed from this broken downtrend and this uptrend. You can see how the price comes up here and sets 2 highs. I called that point E. I think this is the right chart. Can I back out? Ooh, yeah, this is complicated. We're not going to break this down right now, but there was a triangle that formed through here. It's actually this purple line in the screen uptrend, and then this would be the overthrow, the price pushing up through, often occurring in a diagonal triangle itself, which it did, an E, and now we have this big reversal, and we're coming back down, and look, we're almost at the uptrend. So it's like, yeah, if we bounce here and we rally for wave 2, or it's just like, it's crash time, and the crash doesn't make sense to me unless there's a catalyst event, okay? Catalyst event is going to throw everything out the window, but it's time to bounce. It's time to bounce. It's been too many days of chop. VIX grinding sideways, of course. 1, 2, 3, 4, 5, and then this corrective pattern makes me think we have one more push down. That's what I'm looking for, at least, and that would give us a nice. Would this be an ending diagonal triangle or just a diagonal triangle? I don't know. I'm not going to call it a falling wedge because Bulkowski chart pattern analysis would require 3 weeks to pass for that to qualify. It's only been a few days, a couple of weeks, so it's got to be an Elliott waveform triangle of sorts. If we do get a push down link for 1989, maybe even 1937. A while ago, I said we could get down to this uptrend before we see another push up in VIX. This is starting to look like the case to me. I'm serious. It does look like we're going to start seeing a reversal up. But at the same time, it's like, this is the line in the sand where we fall off a cliff if we don't go up. So it's going to be easier for the bears to push the, push the ball over the top of the hill. I don't know. SPXU, I had wave 3 coming in at 1552 exactly. And I think the high at the hourly time frame was 1549. So that's pretty cool. I think that you don't get much better than that. Oh, there it is. A high at 1552 on this hour, 8 a.m. of today. So that perfectly hit that wave 3 target I had at the mini wet level. And it perhaps we're ready to go into wave 4. And wave 4 could be a steady drop down to 1426. And again, I'm going to say it again. It looks like SPXU is the inverse of SPY. So if it drops, SPY goes up. Okay. So as long as the dollar drops and we get this correction and divergence in the bonds and dollar strength, then we have a chance for a big market rally and the memes could explode then. Let's go to Bitcoin really quick. Bitcoin still kind of is eluding me. I'm not having a great time looking at it. It's going to take me probably months to really get this thing figured out. We may have just finally found the top of sub-mini wet wave 2. There is so much extension through here. Ugh, I hate that. Just sideways grind. But sometimes that sideways grind precedes a big push, and I'm looking for a push down and lower. I'm not sure how this correlates with the markets. Bitcoin is going to be doing its own thing for a while. It's all kind of in flux. It's a whole different world in crypto than it used to be. So what do I know anymore is, I really don't. I don't know. Let's talk about Playboy. Playboy did not have earnings yesterday, but guess what? We got a press release today confirming that they're going to be reporting those results on March 16th. Okay, so March 16th, the earnings are coming out, and that makes me happy because, well, I think it's going to be a bullish event. Overall, you can see that Playboy is down, super down, and we got the push lower that I didn't want to see, but acknowledge was possible yesterday, and so I increased my position just a little bit more. I'm going to show my trades here. This video is getting too long. Let's see here, equities. Where is it in general? Show trades. Thank you. You can see I am adding to my position. I initially entered back here, but I bailed out when the price started to fall. Now I'm reaccumulating, and I'm using my profits from trading SPY 0 date expiration options. We do that in the Discord, and we're having a great time. Really good time. I think we're mostly making money, which is great. I think this is all I wanted to share today. I'm sure I'm certainly forgetting something, right? I mean, I just must be. I always am. But if you want to see AMC, go watch the AMC video. It's really short. You know, the bearish thesis here for AMC is that we're in the middle of a bear flag, and what I did in the other video is I shared that this could be a double bottom, which is true. It is true. That's what the bulls are looking for. But honestly, I'm looking for like 523. So market dump. But that's if we fall off the cliff, remember? It's possible we get that big push up. And then it's like, well, now we're in a partial decline of a broadening bottom. So, yes, a lot's going on. It's very complicated. We don't have any signals yet. We are in purgatory. It's purgatory for day traders too. But if you're playing those 0-day options, all you gotta do is catch a 20-minute trend and you'll be just fine. That's what I've been doing. I'm out of here.